Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is back with us, and he's going to give us a broker update. We also have Mike Baumann here with us, and he's going to give us a rail intermodal update. But first, we're going to go to Zack Strickland with the carry update brought to you by PowerFleet. Stay tuned.
Hey there, and welcome to your Wednesday Carrier Update presented by PowerFleet. I'm Zack Strickland, and hopefully everybody's having a great week out there. We are continuing to watch our freight volumes vol. Our outbound tender volume index for the current year here in blue. You can see that it troughs out standard for this time of year. July the 4th holiday, 7-day moving average means that we're going to have about a 7-day window where volumes look unnaturally low. However, volumes are not necessarily unnaturally low historically. Looking at our outbound tender volume index, you can see that volumes are actually right just below, not a couple of percentage points below where they were to start the month of June, which is traditionally much higher than this July the 4th holiday. Looking at the previous years, you can see 2018 in orange, 2019 in green, there's a big drop down to about an OTVI just under 9,000 or around 9,000 in 2018. And we are up around 10,791 right now. Very elevated still, but relative to where it was, which obviously looks very anomalous at this point. The freight market has recovered pretty significantly. We are pretty far below where we were this time last week, and you can see in the middle of the trough, you can see that it continues to fall, indicating that we are probably trending down and out of this very heated period of time. And coming out of the holiday period next week, we'll probably not end up as high as we were to start it, which again, indication of direction of volumes itself in the United States. So hold on to these volumes while you got them. We might be entering not necessarily a depressed state or return to normalcy by any means, but they are probably going to fall out of this peak where we saw it last week. So looking at where we're seeing volumes kind of shift and change in the United States in terms of how quickly are they dropping in relation to other volumes. We got our outbound tender market share tree map here. Anything in green is showing relative growth in relation to other markets in the United States. Atlanta, Georgia, relatively flat compared to where it was this time last week. Ontario and Los Angeles, two of the big really overactive markets over the last little bit, have lost a little ground. So this is probably driving some of that volume down in the United States. Detroit, Michigan, however, increasing some market share. It doesn't mean that volumes are increasing in that market. They just may be falling at a much slower rate than the rest of the country. Dallas, Texas, want to point that one out. That is in that dark blue on the map there, along with Allentown. Dallas has been one of the big big markets in the United States, one of the biggest in the country, the third largest currently in terms of outbound overall volume at 3.13% there, right under that 10.8% week over week growth. So Dallas continues to be a big, strong market, good hub for carriers to accept a bunch of loads into and consistently get freight. So looking at where capacity might be disrupted, obviously we're cooling off. Volumes are coming down, tender rejection rates are starting to slowly fall with them. This is our weighted rejection index. Weighted rejection, of course, is the combination of outbound tender market share and weekly change in tender rejection rate. So anytime that you see this index go very green and get a high value, that means that you are seeing quite a bit of activity in terms of increasing rejection rates as it pertains to the volume of that market. So Indianapolis, relatively large market, leading the way, did have some increasing rejection rates right now over the last week or so. Dallas, Texas showing up one more time, one of the most active markets in the country right now. And you can see that we are relatively quiet elsewhere in the country. That white indicates normal balance in those markets. You're seeing not necessarily anything too statistically significant in terms of change. Atlanta, Georgia out there, however, in that dark red is definitely one to watch in terms of cooling off. It was a very active market. Now here's Dallas, Texas. Here's the tender rejection rate, continues to increase in opposition to the rest of the country, 18.5% tender rejection rate, and it did bounce up. Volumes you can see down there, even though it's troughing like the rest of the country, had an increase in opposition to the rest of the country. And where is it increasing? Through most lengths of haul, long, mid-haul, and short. City and tweener, not so much. So anybody looking to keep utilization up, go to Dallas. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning. I'm Luke Falasca bringing you another broker update, and it's good to be back after the 4th of July. We're in that middle of the week here. It's Wednesday, and I wanted to go ahead and take a look at where volume levels are trending. So we saw here in blue, all right, volume levels, massive surge up all the way to the 4th of July. Fantastic, great, everything's going up, up, up. Now, we expected this first dip here right after the 4th of July. That was normal. We saw that green is 2018, orange is 2019, right? This is a very seasonal dip that we see here. Then we kind of level off, hang out, and then boom, a few days later, we go back into this seasonal pattern. What you notice here, though, is we've actually kept on dipping, it seems, right here in the middle. That's not something that we have experienced before in those past couple of years. So that leads us to believe that we may dip further and kind of dip out of this massive surge, and we probably won't get back to those really high elevated levels. That's not to say that we won't come back and be higher than we were last year or in 2018. We may, time will tell, but it does look like that top was in, and we're starting to slide a little bit. So we'll continue to watch that and see where that goes through the rest of the week. We should have a good idea as to where things go, hopefully by the end of the week. Now, tender rejections, on the other hand, they have slid a little bit, but not much. They're still holding fairly well. They're over 15%, right? So we saw this massive run up where we only hit a little over 16%. So we're still pretty close to where our high was during this run up to the 4th of July. So the market, even though those volume levels do look like they are in a downtrend, capacity is still relatively tight. Rejections are high. Spot market rates are still elevated. Right? It does look like there's a little bit of softening over the last few days, but nothing significant. Of course, that will change a little bit market by market, which we'll take a look at. But overall, it does appear like tender rejections are holding fairly well, especially considering volume levels are sliding. Now, take a look here at our map. This is the weekly tender rejection change. So markets in blue are where tender rejections are increasing the most. Markets in red are where tender rejections are decreasing the most, and then the white markets are relatively unchanged, maybe a slight uptick and a slight downtick. So notice a lot of the blue right here in the middle of the country, especially down here on the Gulf. You have there down in Louisiana, looks like Mississippi, a lot of those areas up going through Arkansas. There's definitely a lot moving there right now. Tender rejections are still rising. Also around here in the Indiana area and surrounding markets, a lot of blue there. These are some areas where capacity is still continuing to tighten, along with way up there in the Northeast around Maine and New Hampshire. So if you're looking for areas to call, these are the areas that I would focus on right now, especially as other parts of the country do soften a little bit. These areas continue to tighten, and they were already tight before. So that's a perfect opportunity to hopefully land. If you have capacity, call on these shippers because they're going to need help getting their freight moved. In some of these other markets, these red markets here, El Paso, a few parts of Texas are a little bit red. Nevada's red. Over here a little bit in Tennessee, pretty much Colorado, right? Those areas are where the market is softening. So be sure if you're moving freight there, you may actually be able to lower your rates a little bit to carriers as the market does soften. Nothing significant because these aren't drastic moves, but a little bit it is softening. And you may even be able to lower your rates a little bit to your shippers to win more freight too as the market softens and becomes a little bit more competitive. As far as Nashville goes, that's the one market we were looking at today. They do appear to be seeing one of the more drastic drops in tender rejections, which is blue. We were sitting at 22%, we're down to 17%. And a lot of that is driven to that green line there, taking a very sharp drop in volumes. That'll do it for today's broker update.
Hello and welcome to your Rail Intermodal Update. I'm here with Mike Baumann. Mike, what's the latest?
So every Wednesday morning at 9 a.m., the AAR sends out the latest week of rail traffic. And so this is what I have here on the board. And the last week was a little bit off just because of the timing of the 4th of July holiday. This year it was on a Saturday. The previous year it was on a Thursday. So it was much more of a complete work week this year. And so as a result, the statistics this week looked better than what we had been seeing. So rail carload traffic was down about 12% in the last week. So those had been trending down about 20%. Intermodal units was actually up 2%. So those had been trending down about 5%. So they looked better, but it's difficult to draw many conclusions. But clearly, intermodal still looks a lot better than the rail carload traffic. This is also a chart from the AAR. And it shows North American freight rail cars in storage. So this is a data series that comes out once a month, and it basically shows the number of cars that have not moved in the past 60 days. So it's a little bit of a lagging indicator, but what's interesting here is you see in 2019, because the rail traffic was down in 2019, combined with all the railroads' efforts to utilize equipment so efficiently with the precision railroading, you see this big increase in 2019 in the rail cars in the storage from about 300,000 units to about 400,000 units. And then with the COVID, that's increased, and now it's over 500,000 units. So lots of rail cars that need to be stored. The price to store the rail cars is skyrocketing because there's just not a lot of space in certain regions. You can see that on Comtrex's website. So the question then becomes for the manufacturers: are they really going to have much to manufacture at all? The first rail car manufacturer that reports does it this Friday. It's Greenbrier. That's a stock that's been down 30% year to date. Not too different than most of the companies that manufacture equipment. Wabtec is in a similar situation. When you look at the breakdown of the different rail car types, you see almost all of these have a large percentage are in storage. The only exceptions would be what I would call flat cars, which intermodal containers and trailers ride on top of flat cars. Some are articulated, some are not. And then auto racks, those go on flat cars as well. So 17% and 22% in storage. But some of these others that are in the mid 30% range, and the tank cars, 36% are in storage. Those are really the most profitable cars on a percent basis that the manufacturers make. So it'll be interesting to see if they got many orders at all when they report on Friday.
Excellent. And Mike, with this influx of so many railroad cars in storage, do you think this is something that's going to be really impactful for the rest of 2020 and into 21, or potentially even into 2022?
Yeah, I mean, potentially longer than that. I mean, the rail cars are really long-lived assets, so they generally last about 40 years, and with the right maintenance, they can go up to 50 years and still be in service. So extremely long-lived assets, and it could be with us for a long time given the magnitude of the number of cars in storage. So the industrial economy, rail traffic really is going to have to come back a long way in order for there to be much more demand for new rail cars to be built.
Excellent, Mike. Thank you so much. Insightful as always. And thank you so much for tuning in. That's going to do for this Rail Intermodal Update, and that's also going to do for this episode of FreightWaves Now. But the content doesn't stop here. We're always streaming around the clock. So check out our FreightWaves TV app and all your favorite streaming platforms, including Apple TV, or on all your Android devices. Thank you so much for tuning in, and we'll see you on the next episode.